Question 1. Topic: Policy structure and contract analysis. Which of the following scenarios best describes the function of an insurance policy's exclusions section? A. It details the conditions under which the insurer is required to cancel the policy. B. It specifies the risks, perils, or property types that are not covered under the policy. C. It provides the insured with a summary of their coverage limits. D. It lists the procedures for filing a claim and resolving disputes. Answer: B. Explanation. The exclusions section of an insurance policy identifies specific risks, perils, or property types that the insurer does not cover. This is vital for defining the scope of coverage and ensuring clarity between the insurer and the insured. Why others are incorrect. A. That the conditions section typically governs the circumstances under which the insurer may cancel the policy. C. The declarations page summarizes the coverage limits, not exclusions. D. The conditions or claims process sections typically address claim filing and dispute resolution. Relevant Colorado regulation. Colorado Revised Statutes Section 104110 outlines the importance of clear policy terms, including exclusions, to avoid misrepresentation. Question 2. Scenario-based. Topic: Claims process. Jennifer owns a home in Boulder, Colorado that was damaged by a severe hailstorm. She files a claim with her insurer and provides all the necessary documentation, including photos, repair estimates, and a signed proof of loss. 10 days after submitting her claim, she has not received any communication from the insurer. Under Colorado claims handling laws, what should Jennifer do next? A. Wait an additional 20 days, as the insurer has up to 30 days to acknowledge the claim. B. Contact the Colorado Division of Insurance to report the insurer's delay as a violation of good faith practices. C. Send a written follow-up to the insurer, requesting confirmation of claim receipt. D. File a lawsuit against the insurer for breach of contract. Answer: C. Explanation. Colorado law requires insurers to acknowledge a claim promptly, typically within 15 calendar days, per Colorado Regulation 5.114. Since the insurer has not yet violated this time frame, Jennifer should send a written follow-up requesting confirmation of receipt. Why others are incorrect. A. Insurers do not have 30 days to acknowledge a claim. Of 15 days is the standard time frame. B. Reporting to the Division of Insurance is premature unless the insurer fails to respond after 15 days. D. Filing a lawsuit is not warranted without exhausting other remedies, such as contacting the insurer or state regulator. Relevant Colorado law. Colorado Division of Insurance Regulation 5.114 governs claims handling practices, emphasizing timely acknowledgement and communication. Question 3. Topic: Casualty insurance. Under Colorado's auto insurance requirements, which of the following coverages is mandatory for all vehicle owners? A. Collision coverage. B. Comprehensive coverage. C. Liability coverage. D. Uninsured underinsured motorist coverage. Answer: C. Explanation. Liability coverage is mandatory for all Colorado vehicle owners and protects against bodily injury and property damage claims caused to others. Why others are incorrect. A. Collision coverage is optional and covers damage to the insured's vehicle regardless of fault. B. Comprehensive coverage is also optional and covers non-collision-related damages such as theft or natural disasters. D. Uninsured underinsured motorist coverage is offered by insurers but can be waived by the insured in writing. Relevant Colorado statute. Colorado Revised Statutes Section 104619 mandates minimum liability coverage for bodily injury and property damage, ensuring compliance with state laws. Question 4. Topic: Adjuster ethics and responsibilities. Which of the following actions is considered a violation of Colorado's Unfair Claims Practices Act? A. Denying a claim without conducting a reasonable investigation. B. Providing an insured with a detailed explanation of claim denial. C. Requesting documentation to support a loss claim. D. Offering a settlement lower than the claim amount if justified by evidence. Answer: An explanation. Colorado law mandates that claims must be investigated thoroughly before denial. Denying a claim without proper investigation is a violation of the Colorado Unfair Claims Practices Act. C. RS 1031104. Why others are incorrect. B. A detailed explanation is required by law and is not a violation. C. Insurers are entitled to request reasonable documentation. D. A justified settlement offer based on evidence is not improper. Question 5. Scenario-based. Topic: Property insurance. James owns a small commercial property in Colorado Springs. A fire damages the building and James files a claim under his commercial property insurance. The insurer investigates and determines the damage is partially due to pre-existing wear and tear. What is the insurer's obligation under Colorado law? A. Deny the entire claim due to the pre-existing damage. B. Pay for the portion of damage caused directly by the fire. C. Deny the claim unless James can prove the fire caused all the damage. D. Cancel the policy for failing to disclose the wear and tear during underwriting. Answer: B. Explanation. Colorado law requires insurers to pay for the portion of damage caused by covered perils, such as fire, even if pre-existing conditions contributed. While others are incorrect. A. Pre-existing damage does not void coverage for unrelated covered losses. C. The insurer cannot deny the claim outright but can limit payment to the fire-related damage. D. Wear and tear is typically excluded but does not warrant policy cancellation unless there was material misrepresentation. Question 6. Topic: Claims process. Which of the following is considered a good faith practice in claims handling? A. Requiring unnecessary documentation to delay the claim process. B. Resolving a claim without properly investigating the facts. C. Promptly responding to all communication from the claimant. D. Delaying payment until the insured files a complaint. Answer: C. Explanation. Good faith practices involve timely communication, thorough investigation, and fair resolution. Prompt responses reflect the insurer's commitment to ethical conduct. While others are incorrect. A and D. Delays and unnecessary demands violate good faith standards under Colorado's claims regulations. B. Resolving a claim without investigation breaches legal obligations. Question 7. Topic: Commercial lines insurance in Colorado. What distinguishes a business owner's policy (BOP) from a standard commercial general liability (CGL) policy? A. A BOP includes liability coverage, while a CGL does not. B. A BOP combines liability and property coverage, while a CGL only covers liability. C. A CGL offers broader property coverage than a BOP. D. A CGL is only available to large businesses, while a BOP is for any business. Answer: B. Explanation. A BOP is a bundled policy providing both liability and property coverage, designed for small to medium-sized businesses. A CGL focuses solely on liability protection. While others are incorrect. A. Both BOP and CGL policies include liability coverage. C. A BOP offers property coverage, which a CGL does not. D. BOPs target small businesses, while CGLs are not size restricted. Question 8. Topic: Colorado-specific insurance laws. What is the minimum liability coverage required by Colorado law for bodily injury per person in an auto accident? A. $15,000. B. $25,000. C. $50,000. D. $100,000. Answer: B. Explanation. Colorado law requires a minimum of $25,000 in liability coverage per person for bodily injury. This ensures adequate compensation for injuries caused by the policyholder. While others are incorrect. A. Colorado mandates higher limits than $15,000. C and D. These amounts exceed the minimum requirements but may be chosen voluntarily. Question 9. Topic: Adjuster licensing in continuing education. To renew an adjuster license in Colorado, how many continuing education hours are required? A. 12 hours every 2 years. B. 24 hours every 2 years. C. 30 hours every 3 years. D. 40 hours every 3 years. Answer: B. Explanation. Colorado requires adjusters to complete 24 hours of continuing education every 2 years, including 3 hours of ethics training. While others are incorrect. The other options do not align with Colorado's statutory requirements for license renewal. Question 10. Scenario-based. Topic: Catastrophe and disaster adjusting. Martha is assigned to adjust claims following a hailstorm in Denver. Many roofs have sustained damage. Some homeowners demand full replacements, while others only request repairs. What should Martha prioritize during the claim evaluations? A. Replace all damaged roofs to maintain uniformity in settlements. B. Evaluate each claim individually and approve replacements or repairs based on the damage and policy terms. C. Reject any claim for partial damage since full replacement is the standard practice. D. Rely solely on third-party contractors' estimates without conducting her own inspection. Answer: B. Explanation. Adjusters must evaluate claims based on the specific policy provisions and the extent of damage. Repairs or replacements are approved depending on coverage and damage severity. While others are incorrect. A. Uniform replacements are not required and may lead to overpayment. C. Partial damage is often covered, and rejecting such claims breaches good faith. D. Adjusters must independently verify damage to ensure accurate claims handling. Question 11. Topic: Specialty coverages. What is the primary purpose of inland marine insurance? A. To cover watercraft and marine vessels exclusively. B. To provide coverage for property transported over land. C. To replace standard property insurance for large businesses. D. To insure against liability claims for waterway pollution. Answer: B. Explanation. Inland marine insurance covers property in transit over land, movable property, and specialized equipment, while others are incorrect. A. Marine insurance covers watercraft, not inland marine. C. It supplements, not replaces, property insurance. D. Pollution liability is a separate coverage area. Question 12. Topic: Casualty insurance. Which of the following best defines uninsured motorist coverage in Colorado? A. Protection against vehicle damage caused by uninsured drivers. B. Coverage for injuries caused to others by the policyholder. C. Payment for medical expenses if the at-fault driver lacks liability insurance. D. Compensation for damage to the policyholder's vehicle during a collision. Answer: C. Explanation. Uninsured motorist coverage compensates for injuries caused by drivers. Without liability insurance, it ensures the insured is not financially burdened due to the negligence of others. While others are incorrect. A. Vehicle damage is typically covered by collision insurance. B. Liability coverage protects others, not the policyholder. D. This describes collision coverage. Question 13. Topic: Policy provisions and endorsements. What is the purpose of the appraisal clause commonly found in property insurance policies? A. To allow policyholders to dispute premium increases. B. To resolve disagreements between the insurer and the insured about the value of a loss. C. To adjust coverage limits annually based on inflation. D. To ensure timely payment of claims by the insurer. Answer: B. Explanation. The appraisal clause provides a method to resolve disputes about the amount of loss. Each party selects an appraiser, and if they disagree, an umpire is chosen. While others are incorrect. A. The clause does not address premiums. C. Inflation adjustments are managed through other policy endorsements. D. Timely payment obligations are outlined in claims provisions, not the appraisal clause. Question 14. Topic: Colorado-specific insurance laws. Which of the following is required for insurance companies operating in Colorado to remain compliant with the state's privacy regulations? A. Offer discounts for policyholders who opt out of marketing communications. B. Obtain explicit consent before sharing personal information with third parties. C. Provide policyholders with free credit monitoring services. D. Encrypt all claims-related communications sent via email. Answer: B. Explanation. Colorado's privacy laws require insurers to obtain consent before sharing personal data. This ensures compliance with consumer privacy rights. While others are incorrect. A. Discounts are not mandated. C. Credit monitoring is not a standard requirement. D. Encryption is good practice but not a specific statutory obligation under all circumstances. Question 15. Topic: Flood insurance. What distinguishes a standard flood insurance policy under the National Flood Insurance Program (NFIP) from a private flood insurance policy? A. NFIP policies provide higher coverage limits than private policies. B. NFIP policies are federally backed, while private policies are not. C. NFIP policies cover all water damage, while private policies exclude certain types. D. Private policies are mandatory for homes in designated flood zones. Answer: B. Explanation. NFIP policies are backed by the federal government and designed to provide affordable flood coverage. Private policies are issued by independent insurers. While others are incorrect. A. Private policies may offer higher limits. C. Both types have exclusions for certain water damage. D. NFIP policies, not private ones, are often mandatory in high-risk zones. Question 16. Scenario-based. Topic: Liability coverage. A tree from your property falls during a storm and damages your neighbor's shed. The neighbor claims you are liable and files a claim against your homeowner's insurance. Under what condition would your liability coverage apply? A. If the tree was healthy but the storm caused it to fall. B. If the tree was dead or poorly maintained and you failed to address the hazard. C. If the neighbor's insurance denies their claim. D. If the shed is not covered by the neighbor's insurance. Answer: B. Explanation. Liability applies if negligence, such as failing to maintain a known hazard, is established. If the tree was healthy and fell due to a natural event, you are typically not liable. While others are incorrect. A healthy tree falling due to a storm is considered an act of nature, not negligence. C and D. These factors do not affect liability coverage under your policy. Question 17. Topic: Workers' compensation in Colorado. How does the state handle workers' compensation insurance for employers who are unable to obtain coverage in the voluntary market? A. Employers must self-insure. B. The state mandates the use of a joint underwriting association. C. Employers can obtain coverage through the Colorado Assigned Risk Plan. D. Coverage is optional for these employers. Answer: C. Explanation. The Colorado Assigned Risk Plan ensures that high-risk employers who cannot secure voluntary market coverage still meet their workers' compensation obligations. While others are incorrect. A. Self-insurance is not mandatory and requires approval. B. A joint underwriting association is not used in Colorado. D. Workers' compensation coverage is mandatory for most employers. Question 18. Topic: Auto insurance regulations. What is the purpose of Colorado's no-fault insurance system for personal injury protection (PIP)? A. To allow policyholders to sue at-fault drivers for all damages. B. To provide medical coverage regardless of fault in an accident. C. To eliminate the need for liability insurance. D. To prioritize vehicle repairs over medical expenses. Answer: B. Explanation. Colorado's no-fault insurance provides immediate medical coverage to policyholders, regardless of who caused the accident, ensuring prompt care. While others are incorrect. A. Lawsuits are limited under no-fault systems. C. Liability insurance remains a requirement. D. Medical expenses are prioritized under PIP coverage. Question 19. Topic: Insurance fraud prevention. Which of the following actions is considered insurance fraud under Colorado law? A. Exaggerating the value of stolen items in a claim. B. Requesting a higher settlement amount for negotiation purposes. C. Filing a claim for a loss that occurred under a different insurer's policy period. D. Adding new items to a policy after experiencing a theft. Answer: A. Explanation. Exaggerating claim values is a form of fraud and is punishable under Colorado law. Accurate reporting is essential. While others are incorrect. B. Negotiation is not fraudulent if supported by evidence. C. Errors in claim periods may occur but do not constitute fraud without intent. D. Adding items to a policy post-loss does not affect past claims. Question 20. Scenario-based. Topic: Business interruption insurance. A fire damages a bakery, forcing it to close for 3 months. The bakery has a business interruption policy. During this time, the bakery continues to incur utility expenses. What expenses will the business interruption insurance likely cover? A. Only the lost income during the closure. B. Lost income and ongoing operating expenses such as utilities. C. Only the cost of repairs to the bakery. D. Expenses related to opening a new location during the closure. Answer: B. Explanation. Business interruption insurance covers both lost income and continuing expenses, e.g. utilities incurred during the interruption. While others are incorrect. A. Policies typically include both income and expenses. C. Repairs are covered under property insurance, not business interruption. D. Opening a new location may require separate coverage or approval. Question 21. Topic: Health insurance in Colorado. Which of the following is a key feature of the state's health insurance exchange? A. It offers group health insurance plans for employers. B. It allows individuals to compare and purchase ACA-compliant plans. C. It provides coverage exclusively for Medicaid recipients. D. It replaces the need for private health insurance companies. Answer: B. Explanation. Colorado's health insurance exchange enables individuals and families to compare and purchase Affordable Care Act-compliant plans, often with subsidies. While others are incorrect. A. The exchange focuses on individual and small group plans. C. Medicaid is separate from the exchange. D. Private insurers remain integral to the system. Question 22. Topic: Commercial property insurance. Which of the following is NOT typically covered under a commercial property insurance policy? A. Building structures owned by the policyholder. B. Business personal property, such as furniture and equipment. C. Loss of income due to business interruption. D. Losses caused by employee theft. Answer: D. Explanation. Employee theft is not typically covered under a standard commercial property insurance policy. It may require separate fidelity bond or crime insurance. While others are incorrect. A, B, C. These are standard coverages under most commercial property policies. Question 23. Topic: General liability insurance. What type of claim would a general liability insurance policy typically cover? A. Damage to the insured's own property. B. Injuries to employees while working. C. A customer's injury caused by slipping on the insured's premises. D. Breach of contract disputes. Answer: C. Explanation. General liability insurance covers third-party bodily injuries or property damage claims, such as a customer slipping and getting injured. Why others are incorrect: A. Property damage to the insured's own property is covered under property insurance. B. Injuries to employees are covered under workers' compensation insurance. D. Contract disputes are typically excluded. Question 24. Scenario-based. Topic: Umbrella insurance. A policyholder causes a car accident that results in $1 million in damages. Their auto policy has a $500,000 liability limit. If the policyholder has an umbrella policy with a $2 million limit, how much will the umbrella policy pay for this claim? A. $500,000. B. $1 million. C. $1,500,000. D. $2 million. Answer A. Explanation. The auto policy pays the first $500,000 and the umbrella policy covers the remaining $500,000, making up the $1 million total claim. Why others are incorrect: B, C, D. These exceed the amount needed to satisfy the claim. Question 25. Topic: Claims process. Under Colorado law, how many days does an insurer typically have to acknowledge receipt of a claim? A. 7 days. B. 15 days. C. 30 days. D. 60 days. Answer B. Explanation. Colorado regulations generally require insurers to acknowledge claims within 15 days. This ensures timely communication during the claims process. While others are incorrect, other time frames do not align with the state's requirements. Question 26. Topic: Homeowners insurance. Which type of policy form typically provides the broadest coverage for homeowners? A. HO1. B. HO2. C. HO3. D. HO5. Answer D. Explanation. HO5 policies provide comprehensive open peril coverage for both the dwelling and personal property, offering the broadest protection. While others are incorrect, HO1 and HO2 provide limited named peril coverage. HO3 covers the dwelling on an open peril basis but limits personal property to named perils. Question 27. Topic: Auto insurance. In Colorado, what is the minimum liability coverage required for bodily injury per person? A. $10,000. B. $15,000. C. $25,000. D. $50,000. Answer C. Explanation. Colorado requires a minimum of $25,000 for bodily injury liability per person. Why others are incorrect: the other amounts are either outdated or pertain to different coverage types. Question 20. Topic: Earthquake insurance. Which of the following statements about earthquake insurance is true? A. It is included in most standard homeowners insurance policies. B. It typically has a high deductible compared to standard policies. C. It covers damage caused by floods following an earthquake. D. It is only available for properties in designated high-risk zones. Answer B. Explanation. Earthquake insurance policies often have high deductibles to account for the catastrophic nature of such events, while others are incorrect. A. Earthquake coverage is excluded from most standard policies. C. Flood damage requires separate flood insurance. D. Earthquake insurance is widely available, not restricted to high-risk zones. Question 29. Scenario-based. Topic: Directors and officers. DO liability. A non-profit organization's board of directors faces a lawsuit alleging mismanagement of funds. What will the DO liability policy likely cover? A. Fines imposed on the organization. B. Legal defense costs for the directors. C. Damages to the non-profit's property. D. Employee injuries caused by negligence. Answer B. Explanation. DO liability policies cover legal costs and damages for claims against directors and officers due to alleged wrongful acts in their capacity as leaders. While others are incorrect: A. Fines are generally excluded. C. Property damages are covered by property insurance. D. Employee injuries fall under workers' compensation insurance. Question 30. Topic: Flood insurance. Under the NFIP, what is the standard waiting period for flood insurance coverage to become effective? A. 7 days. B. 14 days. C. 30 days. D. 60 days. Answer C. Explanation. The NFIP imposes a 30-day waiting period to prevent last-minute purchases during flood threats. Why others are incorrect: shorter periods are not in line with NFIP regulations.